I still think the market could sell off, but at this point, GU is so high up.
Really came up in the field. Get money, get life, or get killed. Man, how the fuck it's gon' feel when we start touching the mills? We ain't got nothing but shells. We ain't got nothing to tell. Watch how the story unveil. Bet you the hustle prevail. Equity all in my deals. $900 a meal. Fuck with that T-bone and snow crab. Hoggy like shrimp when it's chill. Slide on them leathers from Frankfurt. Smell it, make sure it don't stink first. Test to make sure that the brain work. Beat that shit all at the framework.
Hang on.
You were just
All right.
saying my name, no?
Yo, what's up, guys? It's your boy Edward with Commas and Culture, back again for another episode. Getting a little bit off of a cold, so excuse me with the little occasional sniffles or whatnot, but a cold, the flu, nothing can stop us from killing the markets, guys. Big shout out to everybody in the winner's circle. We're doing great and we're going to continue to do great things, but this video is about I would say moderately known indicator. I honestly haven't heard a lot of people personally use it, but I'm going to show you guys one simple indicator that you can use just as that extra layer of confluence to make sure you're getting in at the best entries and maximizing your risk reward. Now, me personally, I've been trading, almost a decade now, and I've gone through tons of different indicators, moving averages, Ichimoku cloud, RSI, MACD, whatever it is, different indicators that measure different things. But the most important thing I feel like in the market, whether you're talking Forex, futures, crypto, two main things that are really important. That's volume and price action. Volume is going to measure the amount of shares bought or sold or contracts bought or sold in any specific period of time. So you want to go where the bulk of the activity is during that specific set of time. Price is going to revisit those areas and pick up liquidity in these high volume zones. So this indicator helps you to determine where the most volume is during a given range. I'm going to tell you what that specific indicator is called in a minute. Once we get to the charts, and we're going to back test this together and show you guys how we've been profitable. Especially in these volatile times, these past 2 weeks, we've been able to get great entries. I'm going to show you guys some of the results from the past 2 weeks, some of the signals we've been calling in the winner's circle. And yeah, with that being said, let's get right to the charts. Let's cut through all the BS, and I'm going to give you guys this little tip. Again, less is more. If you're using other indicators, by all means, whatever works for you. I only use one indicator. I don't even use moving averages. The only other thing I use that's not even really considered an indicator but a tool is Fibonacci, which, hint, hint, it works very good in Confluence with Fibonacci, especially if you're trading my strategy. If you're using your own strategy, by all means, figure out ways how you can tailor it, refine it into your own niche. But I'm going to go ahead and get right into it, and let's get it. So, getting right down to it. So the indicator we're going to be going over today is called the volume range or volume profile indicator. Now, some of you guys may or may not have heard of this indicator before. Like I mentioned, it's going to help to, based on a determined range, identify where the most volume is. Now, there are different types of volume profile or price range volume profile indicators. They have the fixed range, but what I like to use is the volume profile custom range. This allows you to determine or map out your own custom range of which you want to measure volume. And there's a specific time frame. Many people cover this on YouTube. Many people will do the fixed, or many people will, tell you a lot about the indicator, what it's about. I'm not here to, go into like the nitty gritty as to how it measures volume, what volume is. I'm just here to show you how to use it, the best way to use it, how to maximize it. Now, from what I found in the short amount of time that I've been just messing around with this, I back tested it, like I said, and I've used it in live markets in Confluence with my strategy, is we're going to want to primarily for entries, intraday entries, we're going to be looking at the 15-minute time frame. And the exact indicator we're going to use, when you go to indicators, if you type in volume profile, I use this one. It's like a custom one that's not somebody uploaded by DXtrade. It's fire. And the reason I like it is because one, is custom, and two, it's very simple, easy to understand. It doesn't clutter your charts. One thing it does do though that might be a little annoying to some people, it's meant to be helpful, but it shows in each candle once you have it drawn out. Basically the colors, the candlestick color will change depending upon how much buyer or seller's volume is in a particular candle based on your time frame. So as you see, there was bulls taking over the majority of volume. The candles were green. I don't really pay any attention to that because again, we're on the 15-minute time frame. We want to keep this with a grain of salt. We just want to see what's more important than vertical movement with this is horizontal movement. We want to take the range. And the range, although it's identified by highs and lows, we are doing it by time, which is measured horizontally on the charts. So, for example, let's just go into today or this past session, which was Friday the when was it, the 12th, just yesterday. If we get our indicator out here, we just tap this. The time that we're going to want to do this is I'm on Eastern time, so I found that what works best is 8:45. So this is like pre-New York Open to 10 o'clock. I picked these times when I was just playing with it because usually typically news will come out my time 8:30 or 10 o'clock. So I wanted to find the time where there would be the most volatility or most volume in the market when news was playing out or after news to figure out where buyers and sellers are going to be, right? So these bars here, they're a little bit smaller. I can make them bigger, but I don't really pay too much attention to those either. I do. There are some aspects to this I will pay attention to, but I'm going to get into that later on or maybe in another video. But the main thing we're going to be paying attention is to these three lines here. This is what's called your value area, your point of control, and this is another value area. So this is going to dictate where you can possibly get discounts in price and also where the most volume is. The point of control is where the most volume is. You'll notice near this point of control, you'll see these yellow bars indicating high volume. So with that being said, during these times, 8:45 to 10 o'clock, I'm going to sit on my hands. I'm not going to be trading. Preferably, I'm going to wait till 10 o'clock. Um, Sometimes you'll see if we put it here, the areas will change. Sometimes you can maybe do it 9:45 if there's no news coming out and maybe get in before 10. You could have gotten a little bit better entry here at 1.26 or 1.2964, but it would have been a little bit risky because I believe we did have news. We did have news at 10 o'clock. So I did have my range drawn out till 10 o'clock, this 15-minute close here. So once this range, or once this range was identified and measured out here, we had price come right back down to this high volume area, which is also in confluence with this structure for us to give us a buy entry on GU. Now this worked even better. Unless GU, the best move would have been if you got in a little bit before news, which I typically don't like to do. The more important news that came out on Friday was the PPI. So after PPI, you could have got in here at a little bit more high risk entry at this value area, which is also down by our structure here on 15-minute. So that was a possible entry here. And but on US 30, we had this play out even better. So let me see if I can get. And another thing too, this might not work on every pair or every broker. So you have to select the right broker. Just play around with it and see which. Like literally, if I go to, let's see this DXY here, I have two DXYs because one of the DXY doesn't work. But if I draw it on this DXY, you're gonna see it doesn't work. It doesn't let you. It just kind of bogs out and comes up here. It doesn't work. So I have to go to this other broker to use it. But anyways, so yeah, I use it on DXY too. And you guys know, if you guys watch my videos, I don't trade DXY, but I use it as a means of figuring out where these or where the market bias is going. So it works really good when you're drawing your analysis out on DXY to figure out if we're going to have a strong or weak dollar as well. But US 30, where we had our big mover, I still have it drawn out actually. Or did I change it? Looks like it got changed. But US 30, we had 8:45 to 10 o'clock right here. And you see our point of control was right at this entry, which we did. I'm going to show you in a little bit on the screen. Our entries we took in the group was 39.84, 39.82. In Confluence with this fib, if we drew our Fibonacci at this 4-hour close, which was 6 to 10, we had a 38.2 retracement. We even tapped the 50. And we had our point of control filled. You know, not that much drawdown if you got in at the 84. Really, we made a low at 800. So, and we had huge upside, huge upside. And our targets would have been these fib extensions, which is fib extension 1, TP1 hit. I got out here and here. But then we had a TP3 hit. I thought the market was going to stop there, but we even went to TP4 at 40.23.6, went a little bit higher. Which once I saw the market was kind of starting to break above here, I was like, okay, yeah, we're probably going to get a TP4. But I was already done trading. I was like, bro, I had a good day. It's Friday. I got other stuff to do. Let me not be greedy. At the end of the day, nobody knows 100% where the market's going to go. So I just took my profits. We were up at that point 250 points from our initial entry, 250 points. So I'm good, right? So just a quick example of how well that works when you layer it on with additional layers of Confluence. Of course, I had the other things on my charts, these levels here. We were above previous NYSE close. This is also a great Confluence to show that US 30 was going to buy, right? But what the volume indicator does is it prevents you from, when it's going to help you be more disciplined to wait on that discounted price so you can get in where the majority of the volume is at either the point of control or these high value entry areas so that your risk to reward can be high. I mean, we could have had pretty tight stops on here and had plenty upside. GU was playing around. GU, although we did get good entries in, volume kind of died off. And we did make money on GU, but US 30 was the bread and butter. So we can go back another day and show you guys the same thing. We're 10 minutes in the video. So this is pretty simple. Like I said, I'm not going to go too much into the intricacies as to the nodes and the definitions of these terms like point of control. All you really need to know is that's where the volumes are, right? And the times to draw it. So I'm going to show you guys again on GU. Let me get my other GU here. I had another GU. All right, so GU. Let's go to a random date. Let's go to let's not even use this week, right? Let's go back in time. Let's go back in time to, I don't know, Tuesday, July 9th. This is last week. Let's go further back. Let's go. Let's go, I don't know. Let's go here. We're February 23rd, February 26th, whatever. So, I'm gonna go to the 1 hour. We're gonna get to around 8:45. Oh, this is Friday, so let me go the next week. And this is still changed colors because I have an old one on here still. Let me just delete it. This other thing I haven't used in like a year. I don't know why this is still here. UT bot alerts, trash. Delete that. I've had that up for the longest. People probably, I remember when I was first started learning trading and I see all these gurus and mentors, anytime they put their charts, I'd be super analyzing what indicators they be using or what, trying to look at all the little things, try to see what the secret sauce was. But nah, UT bots, you don't need to waste your time on that. But hold on. Where are we right now? Let's move this. We are at 8 o'clock. All right, good. So 8 to 10. right? Let's see if it gave us some good entries. This looks like it's probably going to be a sideways day. Let's see. But we take our indicator and we draw the range out. My mouse is acting funny. So we got to go the 15-minute chart, and we're going to box out 8:45 to 10. It's a Monday, and it's showing us our point of control is here. So ideally, what we should do, if we respect this level, we should short from here. This should be like one of the best places to short from. So let's see what happens. A little sideways momentum. If we did get in here, we're crossing over into different sessions now. But ideally, this is an intraday strategy or intraday setup. When you're doing it on the 15-minute, you're looking to get in and out in New York session. So a day like this, it would have probably been like a break-even day or small profit. It just really wasn't a high volume or high volatile day. So 84 we got in. We really only caught like 15 pips or something. Let's see. We're gonna go to another day. So let's go to the next day. Where are we at now? Let me just go to 1 hour. And it's gonna revisit these areas just because price is always revisiting breaking areas. And a couple of times, even if you were trading London or Asian, you could have took advantage of this same value area to short from, catch some scalps. But the market has been all over the place. Let's see how it applied to the next trading session, which is Tuesday, February. I remember trading February. It wasn't, end of February wasn't the best. A lot of sideways nonsense going on. But let's see. So 10 o'clock came out. Let's see, just for realistic purposes, let's go on Forex Factory. And I don't know why I just typed that in twice, but let me go back to February. What was the date? Let's see if we had news. 27th. February 27th. We did have 10 o'clock news, so it would have made sense to wait. So 10 o'clock came out right around here. Price kind of fumbled around a little bit. You would have had to really wait before you got the move. But keep in mind, this isn't going to tell you direction as well. I've been trying to figure out a way to help it give me a better idea as to what the direction would be. If you guys have any experience with this indicator, because I'm still new to using this, drop a comment if you know how this can be used to help identify direction as well. But the direction comes from the other confluences you're going to be using. So I'm really, for purpose of making this video just short and sweet, I'm not going to go into the whole breakdown and do all my confluences. You can watch my other videos for that, or you could join the winner circle. This is also going to be implemented into the strategy course as well once we get another week or 2 or 3 of using this in the live market. So anyway, so 10 o'clock came. News came out bad. We rallied up for a second, but then we broke these lows only to grab more buyers. Then we had an impulse move to the upside. So if we got in here, it would have been a little bit early, but let's say we got in here. We did make lows at 59. So really, this is with a 15 pip stop. If you got in at this level, 72, let's say 62, and then 5 more pips. So with a 15 pip stop, you would have still been in the trade, even if you got in a little bit early, right? So we went and draw down for a little bit, but then price came back down or came back up, and your point of entry you could have double tapped this, or you got in at the point of control here. This was a pretty quick move to the upside. So realistically, unless you're probably even on a lower time frame, you probably would have had to have a buy stop, because this happened pretty quickly. So yeah, price went and rallied. This is 32 pips, and we are at not even 12 o'clock yet. Let's see what else happens. So that was like a 2-to-1 right there with a 15 pip stop. And the day's pretty much over, right? So another day that wasn't a big day, but using these areas would have given you the best entries. Now, you could play with the range a little bit. Another range I've been playing with is giving it a little bit more time, like sometimes like 8 o'clock, like right before 8:30 news. Depending on the day, it might give you like a little bit lower entries, but overall, I've just been playing with the 8:45. Now, there is one other range that you can use for extra confluence that earlier, and I just realized this because I just recently started using this indicator, but I was going to save this for the course members, but what I'm going to tell you is you can use this to help you find direction, but what you have to do uses the previous daily range. So if you draw this out on the previous daily range, this will also give you another high volume or show you the high volume areas on the chart, but with a bigger range, of course. So this will also, going into the next day, once you have the previous day drawn out, going into the next day, if you're respecting these high volume areas, you'll know the direction. So I actually take back what I was saying earlier about, oh, I'm still trying to think of a way. I forgot about that, guys. But I'm gonna draw that out and keep that. I gotta keep some of the sauce for the paid members now. You know, I'm trying to help you guys, but I can't give you guys all the sauce yet. You know what I mean? So y'all want the full sauce? Y'all want to see how I break it down with the daily too? Then link is below. But the lower time frame, the 15-minute time frame, is definitely good for getting those pinpoint entries in. So let's do one more example, right? Because I don't know. Overall, the market's been chalked. I picked a bad month because we just been in the range this whole time, like a back and forth type shit. But let's see if we get a little breakout here. See, look at the 1 hour, like it's trash. It's trash. February was a shitty month. You know, we did have some moves, but the end of it was just like, what is this, bro? What is this, bro? Just back and forth, 30 pips, 30 pips. Like this whole range from like what, the 22nd all the way to current price, 5 days of just range, 30 pip moves, 35 pip moves. All right, so next day, Wednesday, 7, 1, 2, 3, 10 o'clock. Let's go to the 15-minute. And we're going to draw our new range profile, custom range. And we're going to go from 8:15 or 8:45 to 10 o'clock. And here, once again, point of control being retested and respected. We came back down, tapped again at 10:45 for a wick entry. Let's see if we continue further. See if we can get some moves. Let's go, baby. Nice little pop. So that would have been, let's see, 1.2644. We made the highs at 71. Still not that much pip, but you guys, the point of this is just to show you the entries, you know, because this is just a bad month of price action for GU. Because obviously we're not getting that much pip, but it's really just due to the market in general. But as you see, it made the high. The ideal entry was to get in right here. You know, you could have maybe got in lower if you wanted to trade sooner and get in here, catch a little extra pip. But this was your safe zone right here. Really, this is only like what, less than a 10 pip difference, right? For all you guys that like to trade before news, I don't even know if news was on this day. Let's see, the 28th. Yeah, we had 8:30 news. But all you guys that like to trade news, rushing into news, you know, you really might have only caught like an extra 10 pips, right? If you got in here. But the volume was here. Point of control filled at 1.2644, and then we took the move up for highs at 73. So almost 30 pips, 29 pips. Good deal with a 15 pip stop, still 2-to-1 RR, respected structure. Let's see how the fib looked on this 4-hour fib. 4-hour fib was fucked up. Hold on. Wait, what? No, back then the 4-hour was closing funky. We would have to use a. Hold up. So this opened at 8? Nah. Yeah, 4-hour would have been like this. Because we want to get the close. We want to draw the fib based on the close right before NYSE. So for 4 o'clock, this candle opened, closed at 8 o'clock. And then we had the volume range indicator lining up right with the 38.2 retracement. So this is like multiple confluences right here, and then straight to TP1. That's how you layer it. I mean, I don't know what else you guys want me to show you. You know what I mean? This is a perfect play right here. Now, imagine in better market conditions like we had this week, where we're catching 40, 50, 60 pips, or the move is going 40, 50, 60 pips, for those times that, you know, hey, telling you this thing works sweet with the Fibonacci. So yeah, that's pretty much all I got for you guys. We're running the video 23 minutes now. That's what I wanted to cover with you guys. A great indicator you can use for Confluence. Um, Great indicator for figuring out where the volume is on the market. Just remember the most important thing is to use the custom. You can use the fixed, but I prefer the custom. It's a lot more tidy. Some people like to have the lines extending out into the future, but that's not really needed. Like I said, as a little tip, what will help you find direction too is if you go to the hour time frame and mark out the previous day and going into the new day, seeing where price respected in relation to that. I'll get into that more in one of our other videos, but right now I just want to give you guys an introduction if you haven't heard this indicator before, because I know I haven't. Um, and I was just shocked by the accuracy of it and just the common sense it makes, because I've had experience with other volume based indicators, but they're just always laggy and confusing and just too much clutter. This is simple. I could take it on and off. It's custom. I like tools that, just like with Fibonacci, I can be dynamic with. And this is a dynamic tool. So with that being said, make sure you like, subscribe. Um, Join the winner circle. Going to be giving out some discount codes in the um, description below. So check that out, and I'll see you guys next video. Peace.